The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, so take a look at Tuesday's market trade action, wrapping things up. What the heck happened in the cattle market? That's one thing we want to talk about. A big down day there. Mixed action in the grains for the most part, and really just feels like the trade is assessing or has assessed all of the USDA numbers and now the beginning of the month, money flow, etc. So we want to get an idea of where things stand. Joining us here today on the program, Tyler Schau with agmarket.net is our guest analyst here on Market Talk. And Tyler, welcome back to the program. It's good to talk with you again.
Yeah, good to be here.
Well, let's dive in and let's start with the grain trade. Let's take a look at that first. We normally start in grains on the show, and Tuesday's action pretty quiet. I'll call it. It feels like that now that we got the USDA numbers from Friday behind us, and we've gotten past the beginning of the month and the end of the month, all that volatility that typically happens, kind of feels like we're back to the same harvest pressures here and things like that. Is that how you kind of feel about the overall grain market picture, or something different right now, Tyler?
No, I would agree with you. You got some harvest pressure, especially on soybeans. You got some technical damage that occurred. The one good thing I would point out on soybeans, we went down to 1256 and 3/4 on your November bean chart, which was the exact same low that we had in June, the day before we got that acreage report that told us we planted a lot fewer acres of soybeans than what we actually did, than what we thought we did. Going into that report. And so that provides some significant support there that that low held. I think the soybean picture is really demand driven. And then, we're still in this boat where we really don't know a lot more about national yield today than we did a month ago. Sometimes it almost gets a little nauseating debating what the yields are going to be. Some of the numbers are coming in. We're getting some yield reports from around the country that are really good. I've gotten a few here in North Dakota that are just unbelievable for the state of North Dakota within the last few days. And so, you're hearing some of that, and then you're hearing some yields that aren't quite so good. So, the market's kind of all over. I think you hit the nail on the head. For the last 2 weeks, we've been talking end of month, end of quarter, the NAS reports, and then possible government shutdown. We got those. They were slightly bearish on Friday. Government doesn't end up shutting down. Maybe a little bit of rebound trade yesterday, and now we're just kind of back in the ho-hum trying to decide some market direction here.
Well, and I find it interesting too that on Tuesday, stock market down fairly hard, kind of a risk-off tone there. Yet the grains held up somewhat nicely in the face of the Dow being down almost 500 points. So, to some of the concerns about the end of the month and different economic headwinds and more, and the continued rise that we've seen of the dollar. I know 10-month highs above 107 today. So surprising that grains didn't fall more out of bed, but actually held somewhat firm on Tuesday, Tyler.
Yeah, I would say that that's been one of the reasons a lot of analysts have floated around as wheat has gotten hammered here the last month and a half, 2 months, was that the dollar kept going up. Here we see the dollar go over 107, break through some resistance on the top side, put in some recent highs, and yet we've got wheat trading higher. Probably just symbolic of like anything in life, we tend to push things a little too far. Sure. That's just human nature, and I think the markets are just a collection of human and individuals making decisions about what price should be, and have a tendency to push them too far to the upside when we're bullish, and maybe a little too far to the downside when we're bearish. And so I think Friday, and especially in the wheat market being down 37 some cents, both in Chicago and Minneapolis, probably a little bit of an overreaction. So the last few days we're just kind of recapturing some of that. I wouldn't go out and put my bull goggles on and tell you to buy wheat and that it's only going higher from here on
Mhm.
out. But you're going to see some of that, and it's just like I said, it goes back to a lot of uncertainty on how big this crop is, and then whether or not we're going to find a home for all of it here.
Yeah.
Once we get it wrapped up.
Very, very good point. I want to talk about finding that home here in a second. A little more on the wheat crop, though. I know you looked at the small grain summary and everything that we got on Friday. Were you surprised with some of the numbers that we got on the wheat trade?
I mean, I'm not going to tell you I predicted that we'd see the yield. The yield was increased. It depends on how you look at it, what your
Sure.
measuring stick is. If you're measuring it from the WASD that we received in September, it was almost 3 bushels per acre higher. That's on all wheat classes: winter wheat, spring wheat, you name it. But one of the things I've been telling a lot of customers is WASD is put together by the World Outlook or World Agricultural Outlook Board. The small grains is put together by NASS, the National Agricultural Statistics Service. So you've got two different groups there. Now, one of the things that will happen is going forward, the WASD will now incorporate NASS data, right? So
Hmm.
now they're going to use it, but really they're two different entities. They will eventually kind of reconcile each other's numbers. But the other thing you could measure that small grains report to was in August, I believe, kind of mid-August, NASS put out a crop production report. And that's the one where we really saw yields increase, especially on spring wheat. I think it was in South Dakota, which isn't a huge spring wheat producing state, but their yields were like 43% higher than the estimate in August. North Dakota was something like 6 or 7% higher. Minnesota, northern and western Minnesota does grow a lot of spring wheat. Their yields were 24% higher than the estimate in August. Montana was considerably higher. And if you dig into the methodology of how those reports are put together, it's farmer surveys.
Hmm.
And one of the things I've been saying for the last few weeks, anyhow, really a month, was when we called around in June, July, and even early August, to farmers and some agronomists that we've got in our network. They all told us how terrible this spring wheat crop was, and especially in the northern tiers of North Dakota, the eastern third of North Dakota, we got a lot of reports of it was just too hot early in the summer, and it forced it to head out. The crop was really short. And then literally 3 weeks later, mid-August to late August, they start telling us, yields are actually, normal. In some cases above normal, and in some cases way above normal. So this small or the small grains report that we just got from NASS was again farmer surveys, but now it was post harvest. So that August report was pre-harvest surveys where farmers were uncertain, a little unsure, and they probably reported, hey, our yields aren't going to be very good. Now they got the stuff rolled up in the bin. It was good, so we saw this very large increase in expected production,
Hmm.
something like 50 million bushels of spring wheat that we didn't think was going to be there. And that just it's a lot for the market to digest, especially when demand has been as poor as it has been.
Yeah, demand has been poor, and that's across the board. I mean, whether we're talking corn, beans, wheat here from the U.S., and I think especially on the bean side, this is that time of year. This is that typical window. Boy, I'm a little concerned. It's gonna be interesting to watch here the next couple of weeks if we can pick up some of those soybean shipments here, Tyler.
Yeah, we need sales to pick up. This is our export window, and one of the things I do like to clarify is because this kind of I've noticed it confusing some people. We're not necessarily saying demand isn't there. We're not saying that the world isn't buying. It's just you've got Brazil that is pumping out massive amounts of soybeans, increasing the acreage that they're putting into production. And it's the old adage: high prices cure high prices. It's going to
Mhm.
get the world, and we're in a world market, and you can not like the fact that maybe we trained them and gave them our technology, and now they're beating us at our own game. But at the end of the day, it is what it is, and as a farm marketer, you've got to understand that these high prices induced more production, and the world's going to go buy it where it's cheapest, which is not going to be beneficial to our price structure.
No, and China is one of the big players, of course. We did see sales Tuesday morning of soft red winter wheat and soybeans to China, but still, they're buying a lot, as to your point, from South America, and that's a big thing right now, Tyler.
Yeah, they're sourcing it elsewhere. They're buying it from South America, from the Ukraine. They're buying it from
Yeah,
all over the country, and or from the world. Excuse me.
yeah,
And that they're going to go find it. Like I said, they're going to find
yeah.
it. They're a communist country, but they're quite capitalist. I
Hmm.
mean, they're going to go. They have the ability to make those decisions as a unit, and so they're going to make the decision that's best for China. They don't really care about the U.S. farmer, to be right honest with you.
We're having a conversation today with Tyler Schau from agmarket.net. Tyler, any other thoughts on the grains before we move over to livestock trade? Just want to kind of button up our grain conversation here real quick. I've been saying this a lot. I know it's a busy time of year with harvest, and a lot of guys are going fast and running hard, but still got to be vigilant and manage their risk as best as they can. And they have a lot of tools in front of them to do that right now, don't they, Tyler?
Yeah, and I would say that one of the things I've been talking with a lot of my customers on is avoiding, if you take a step back, $5 corn 3 years ago, you'd have been doing jumping jacks for. $7 wheat, we'd have been ecstatic for. $12 beans would have been outstanding. I realize using input prices that we've got in 2023, those numbers may not pencil out quite as well as you want. But the overall trend of with the exception of cattle, the overall trend for all commodities, if you pull up a chart and go back 2 years, has been a downtrend. And so I think what the implication for the producer is, I'm not saying there won't be some rallies, and I'm not saying that this market's just going to go straight down. Don't expect that huge rally where you can just put it in the bin and it's going to increase in value over time. It's going to be one of those. You're going to want to be nimble. You're going to have some target orders working. We like looking at some marketing some corn and against March futures here on any kind of a rally. Same with beans and have those orders working, whether it's with your broker, whether it's with the elevator. Do something on these rallies to protect some risk.
All right, let's talk livestock. Cattle, feeders, fats. What on earth happened Tuesday? My first initial thought here is higher dollar having an effect. Is it that simple, or is there something else that I'm missing here, Tyler?
I mean, you can make it that simple. I think you look all along in this cattle deal. We've been saying, look, the fundamentals aren't going to change, right? We've got tight cattle supplies. That's not going to affect this market. We're not going to produce enough cattle overnight to justify a $5 drop in the futures market. What we've got to pay attention to there is also the demand side, and really the only gauge we have for that is how is the economy working. And we don't really, that's not something we can predict how the consumer will react to these numbers. It's just a market taking a stab at where prices should be. What I would say is if you looked at the commitment of traders report, you had the managed money crowd long feeders and fats. It's not a record long, but they're long quite a bit. And in the feeder cattle, it's a fairly illiquid market. There's not a lot of trade that goes on in that. And so if you got a fund manager that decides he wants out of his, cattle position, which he's probably made a ton of money on here over the last year, really getting long feeders and just continue to add to that long position as this market rallied, and he hits the sell button, and he's offloading a couple hundred to possibly 1,000 in one crack. That's going to take the market down, and it's going to take it really fast. And I believe early this morning, one tick took the market down 60 cents in feeder cattle. So, that's going to happen. It's going to, the pin's going to pop. I'm not going to call and say that we saw the top in the feeder calf market 2 weeks ago. And I'm also not going to say we're going back and putting in new highs. I mean, I can tell you that we're at, this 250 range is something we've never seen before, 260 on feeder cattle. So there's no real road map of how this plays out like there was in, corn and wheat here over the last year. You've just got a market that's on edge. Like I said, they've made a lot of money being long the feeder cattle. And when they decide to get out, who's going to buy it?
Market on edge. I like how you put that because for me personally, I'm watching closely what this retail demand is going to be like this fourth quarter. I mean,
Mhm.
our folks, we've talked about this before. If someone wants a steak, they're going to go buy a steak. But also to that same point, if they can't afford the nicer cut, are they going to go to a cheaper cut? Are they going to substitute pork or chicken? Credit card debts at all time highs and things like that. So I mean, something to your point on edge, something's got to give here, I think, Tyler.
Yeah, and that's when that happens. Typically the cattle market's not going to know about it till after the fact. So it's
Mhm.
trying to stay ahead of it. Cash prices are good. I had some conversations with some buyers that were in sale barns today, trying to figure out why the board was down $5, and cash cattle were setting new highs in the barns they were in. So the cash market hasn't changed yet. Sometimes the cash leads the futures, and sometimes the futures leads the cash. We'll have to kind of see how this shakes out over the next few weeks. But I would just go back to that. You've got a market that's every other commodity market has sold off
Mhm.
big, and they don't want to be the last one holding the bag. So
Yeah, no, good points there. A lot of things to keep in mind. Hogs, too, I'll rope them into the conversation. Hogs a little bit different. It kind of feels like just treading water here the last couple of weeks, and even so on Tuesday. I know I saw a couple triple digit declines, but I mean, really, hog market just feels like it's just kind of just churning around right now, looking for direction, Tyler.
yeah, we got that hogs and pigs report
Yeah.
last week, and it was slightly bearish. I wouldn't say it was massively bearish, and I wouldn't say it justified the sell-off we've seen over the last 3 trading days. But that's kind of the nature of the hog market. There again, it's a low volume or lower volume market, and so market moves lead to stops being triggered and just accelerates the movement down. I will say, one of the things that Brian Split always says, hogs tend to make V tops and V bottoms.
Hmm.
There's not a lot of going down to a low point and then just kind of treading water. So, I'm not calling for a bottom, but at any point that thing can move $3-4 higher with the snap of fingers in a trading day. So.
Very, very true. Well, Tyler, before we let you go here today, let's get some final thoughts. Anything else that we haven't talked about you want to mention, or anything you want to reiterate to folks here as they take stock of what this market trade is doing here at the beginning of October?
I really think we got to keep a close eye on this financial market, and not necessarily just the stock market, which, you got the Dow down 500 points as we speak. Take a look at Treasury notes, the 10-year Treasury notes, putting in year lows here. That's signaling that the market expects maybe not necessarily higher interest rates, but rates to
Mhm.
stay elevated longer, when the value of these treasury note futures is continuing to go down. So market is not looking for any type of reprieve on interest rates anytime soon. There's been some hope that maybe the Fed would come in and start to lower rates in 2024. I know some of that optimism is dissipating, and that's just as you mentioned with credit card rates, when people owe money and interest is higher, that uh, the size of the pie doesn't change. So
Mm-mm.
if we're paying more in interest, that means something else got to get cut out of the deal, and that's generally doesn't bode well for commodities.
No, it doesn't bode well for commodities. And I have to think too. I mean, you can give a good farmer perspective on this, and from the folks you talk to as well. I mean, some of those conversations coming up here at the end of the year, the cost of money and cost to do a business, operating loans. There's gonna be some tough conversations, I think, here at the end of 2023, Tyler.
Yeah, and that's going to be a big one. You take a look at a soybean worth $12 cash. At 8% interest, that adds up. If you're storing them for a long period of time, you're giving up a lot of interest just by keeping that soybean in the bin. So those are all things we got to pay attention to. Just the cost to carry that stuff is going to change.
Mhm.
Farmers are going to have to be pretty savvy marketers here, because, like I said, that I don't like being the bearer of bad news, but
Yeah.
it the trend is down, and
Yeah.
until the trend changes, we have to stick with it.
Well, I know folks, if they have questions, they can reach out to you and the rest of the Ag Market team very easily. Agmarket.net. I know phone numbers there as well. You guys have a lot of great intel and more. I know they could check all that stuff out online, can't they, Tyler?
Yep, check us out on the website, and we'd love to talk to you.
Agmarket.net is where you can find them. Tyler Schau with agmarket.net. Always good to talk with you, buddy. Thanks for joining us on Market Talk today, and we'll talk to you again soon.
Take care, Jesse.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.